Yeah.
Hi, my name is Steve Bodnar. What I do is I have a venture company, not a venture fund. What I'm doing is a lot of management consulting as well as investments in the cryptocurrency space. One of my recent projects was Subkey, and they're doing very well right now. I think it's up about 150% from where I bought it, so I'm pretty happy. Besides the cryptocurrency space, which is obviously a lot more high risk, I also assist in syndicating deals, not just in the crypto space, but also in real estate. I'm starting to get into oil and gas and whatnot, but that's more or less what Geometric Energy Corporation will be more or less going for. All my friends is involved in that heavily. Pretty much that's about it. Management consulting and some investments.
Should we
Any questions?
ask some questions?
Yeah, where do you see the ICO and crypto space heading?
So interestingly, the reason why I had to step out, I had a meeting with Lewis Cohen, one of the leading attorneys in the space, and he actually recently met with the SEC commissioners. What they're doing is they're actually making differentiation between utility tokens and security tokens, which is an interesting dynamic because very much interestingly right now, the trend is that the SEC was going to say all tokens were securities. Well, now that's actually not the case because of the recent speech by Hyman, one of the SEC directors, not one of the commissioners. He essentially cited the, which one was it? It was a long time ago. There were some people came up with the idea of selling receipts on whiskey, basically because whiskey would appreciate in price over time the longer it aged. Its present spot price on the receipts was lower than what it would be in the future. So what they were doing, they were selling the receipts, but really the product behind it was the whiskey, and therefore it got around the securities laws, which actually is now the basis for a utility token. So if everything in the particular ICO goes into a very clear format that says this is exactly what the project is doing, this is why we are using these tokens, this is how they're going to be associated with the project, the same concept applies. That's using some, I would say, a little bit obscure legal precedent to get around things. Interestingly also, there's, I think back in the early 2000s, ARPANET. ARPANET was actually created by this guy, Alex Mashinsky. Alex essentially took the concept that each major cell provider provides data, right? They probably have too much data. So he created a system where they could actually wholesale that data to other companies, smaller companies, for example, like Boost Mobile, or now today you have, what are a couple other ones, besides like T-Mobile and whatnot. They would basically trade their data back and forth wherever it was needed for their customers, making the system more efficient and monetizing essentially inventory, digital inventory, as somehow. A lot of people aren't very versed in that. It's an interesting concept, and they actually have introduced the same concept as utility tokens are today. The thing with the utility tokens, the difference between a utility token and a security token comes down to what the desired outcome of the investment is, whether or not, so the security token is an investment where you expect the price appreciation. Utility token, you're actually using an alternative to capital to conduct business with a certain company. And I believe that we briefly spoke in regard to how these tokens and whatnot are actually similar to previous, how do you say, experiments, I guess. Could you speak a little bit to that?
Well, I mentioned earlier about tokens used in early USA during the Civil War when there was minimal currency available, and also during the Industrial Age when large employers would issue tokens and give them to their employees via pay in cash, and then they use those tokens in the company store. So it was like an ecosystem where they benefited, and it was really not fair for the employees. So there have been some times in history where there are these tokens that have been issued by private individuals, private companies that were circulated and used as legal tender, because some of the store tokens that were issued, other vendors would accept as well, especially if they knew that the storekeeper or the company, they would accept it because then they could go spend it somewhere else or go to that store and spend it.
Right. But unlike the way that companies back then used to issue these tokens and whatnot, what they are now doing, because of it being a decentralized consensus-based process, you eliminate the unfair portions of it. Hypothetically speaking, that is, unless you take into account OTC and whatnot and how that operates, and that could actually undermine some prices in some sense.
So you say that you're actively trading with some of these tokens.
I wouldn't say actively trading, I would say actively holding on investments. So certain tokens are actually going to have intrinsic value to them
How do you
because
determine that?
I look at what the project is, I look at who the teams are, I look at what the product is that they're making, whether or not there's an actual use or a use case for the token within the company to actually facilitate transactions, whether or not there's going to be widespread adoption of this, especially in unbanked societies and emerging markets. So when you take those factors into consideration, when you take into consideration the ability for market penetration and market adoption, there is definitely a significant value proposition. So some of these projects, they are actually delivering on what they are promising. So one of the ways I look at are the relationships and partnerships of these organizations. Self-Key, for example, when I looked at it back in January, right around the time they were doing their ICO, I waited for their ICO to come out, and then I went into it, and I started to scale in. And scaling is an important thing in terms of trading, in terms of intermediate to a long-term trade. I do intermediate to long-term. Short-term is just it's not my style. It's way too, you're essentially competing with computers and algorithms, and that's not a way to actually effectively approach the market in this day and age. You would actually have your own algorithm written. So what I'm doing, I'm taking my own money, putting it into these projects that I see that there's going to be a vertical value proposition for, later in the future. So far, Self-Key has hit every single one of its targets on time. That's really excellent in the ICO space. What tipped me off to them, however, was the fact that they have been through several incubator programs since, I think, 2014. They did not launch their token until this year. They were backed by, in some cases, Standard Chartered, where they did simulations and they had several tests done in place.
What do they do?
Self-sovereign identity. So what that means is you're able to put your information into a smart contract onto an immutable ledger, and you're able to hypothetically create passports, government-issued IDs by submitting this information to governments in your, say, local governments or international organizations, and they're able to take accountability and not so much track you, so to speak, rather they will have a proof that you are who you say you are. And that opens you up to being able to open bank accounts, opens you up to being able to find meaningful employment, education, several other things. So it's a very good vertical to have.
So how does it, I guess, track back to the person? How is it related to the person? Because it sounds like all this information is reported.
Right, their wallets.
Right.
So you have the Self-Key wallet, which essentially allows people to open an account and collect coins. When they do an action on the platform, they are rewarded with coins, and they are able to trade these between one another, and they're able to use that as currency, as if it was currency.
So the distinction between a utility and a securitized.
So a utility token is going to be something that is used effectively for transactions. It's not being bought or used as a speculative investment. Rather, the idea is to purchase in and be able to utilize this across borders, per se, and get across certain regulations. When it comes to the securities token, you're actually backing the particular token with an asset, making it a security, making it quantifiable, and there is a way to quantify the potential rise in the price of that token rather than simply trading. Now, utility tokens, they might go up 15-20% reasonably from their range. Possibly they could be trading at different ranges, and depending on what their interest is, they could go up tremendously, the same way as a security token with that, but it's in their intent and it's in their use. So that's where you make the differentiation, at least in the United States.
Do you have other companies that you're looking at or that you like?
Oh, you want to know my investments?
Yes. Or what it is, what projects you are really favoring?
I very much favor Ether Inc. What they're doing is essentially your back-end solution for your administrative processes in companies. So you're basically taking your back office and automating it. And you're able to essentially issue stock, company reports. You could create compensation plans for your employees. You could create contracts for your vendors, contracts for your suppliers. There are a lot of different implications on creating what would be essentially a decentralized organization that would actually boost the consulting business. Another company that I like is Exelpoint because they are helping out refugees, specifically the Rohingya in Myanmar. What they do is what they've done is create a platform that allows you to take educational exams and be rewarded for taking those exams with the coins. That validates what you're doing, what your level of expertise are in a certain area, whether or not you're qualified to perform certain practices across, again, because to be across borders, and it's focused heavily on the refugee population, starting with the Rohingya people. Nano work is another thing that they're focused on. Nano work is essentially small tasks that don't require full-time employment. Rather, they are more physical labor type deals that are, if you need, for example, a cup of coffee or something, you could actually summon someone and pay them in coins to deliver your coffee, things of that nature. So very small tasks that don't require much effort that also allow a reward system. Probably in the refugee case, you would think about moving debris, helping build a house, helping build some sort of shelter, some sort of support for moving mostly logistics, because logistics is probably the main issue that they're facing in terms of not just, say, roads, bridges, infrastructure, that kind of thing, but also you're looking at cars, bikes, tractors, things that you can actually use, farm equipment, food, grains, those kinds of I guess moving from one place to the next and being able to compensate someone effectively and fairly. Even moving cell phones, which would actually probably the first thing you'd want to have them trained on in any case, because otherwise the application loses its intended purpose without having internet connectivity. So that's one of the drawbacks, but they're working on that. I think we're going to be able to do that. So the reason why I'm heavily involved with both of those companies, Ether Inc. and Exelcoin, they have their products already out. They've got people using them actively, and they also have their actual coins ready for distribution. Third one is Loot Safe, but they're looking more for a bridge round in. That's a little bit, they're still earlier stage at this time. But I still like them, and part of the reason is because of my network with the family offices and whatnot. That's how I got connected with them. So it's a project that has significant financial backing in case something does go wrong, which is something that no investor can complain about.
You mentioned the SEC before. What are your thoughts about where we are at regulation-wise, and where we're going or where we should be going?
Right, so before I answer that question, I'm going to make a disclaimer. I'm not an attorney. I'm speaking from a consultant's perspective. In terms of where I see everything is going, I think it's moving in a positive direction towards cryptocurrency because I think a lot of people have gotten involved. And I think that you're going to see a more mature space coming into light. The concern that I have, though, is access to your individual investor. Someone who's a retail investor who does not necessarily have a bunch of money. what cryptocurrency has allowed people to do, people without a lot of capital that meet certain requirements for regulation, dealing other sorts of private placements, they're now having access to getting involved in these companies at a very early stage, where they can now put their, where they can now essentially put their resources to work in something early stage before it actually becomes a big thing. Because that's where a lot of the value is lost. Unless you're previously, before cryptocurrencies, and with the new regulations since 2008 financial crisis and the tightening of debt around your individual person, mostly because banks don't really require to lend to your everyday person, this has taken over essentially what your small business loan was doing. So it's capital access for your retail investor that also bridges the gap between retail and institutional. So that's the way I view cryptocurrency, and I think that's something that's necessary and meaningful to work towards. So it's, that's a major reason driving force behind this space, because of economic empowerment.
Can I ask how long have you been working
With crypto?
Yes.
So in terms of cryptocurrency, I've been following the space for about 2 years. This is what I do before I get into any space. When I actually began working with it is after I realized that the CME group, Chicago Mercantile Exchange, and Chicago Board of Option Exchange decided to begin trading Bitcoin futures, which prior to that I thought the space was crazy. When I realized that it was getting institutional adoption, that's when I decided to take a closer look at it and discern and really look at the inches of what people were doing with this and what the benefits are actually of the products that were being developed. One thing that I do have to say, though, there are a lot of issues with the space, because I would say somewhere in the neighborhood of 90 to 95% of projects are not exactly going anywhere. And you have to be very, very careful with what you are putting your money behind and what's actually being implemented. But the things that are being implemented, they're very good. That's one of the positive outcomes of it. So you're getting a lot of how would you say it? Fluff, I guess. But at the same time, you're also getting substance. But it requires effort and time and research to discern between a good opportunity and something that is just looking to raise money for a reason other than the sake of raising money.
One of the things that you might have not heard while you were out is that, when I was talking about it, is that the London Stock Exchange has adopted the cryptocurrency and Bitcoin, and they are already running it, as well as Italy as well. There are other exchanges within Europe that have taken it and are also having currencies in terms of also venture capitalist funds that have that within their funding. And I recently went to a summit where there were large institutional investors that had adopted this within their pension portfolios, and that had already been started in Europe. So that's from a European perspective, because we didn't know that, that's been adopted very much by some of the institutional pension funds in the UK.
Right. So these pension funds and other institutions that have purchased cryptocurrencies, a major reason why they're actually purchasing them is because of the futures contracts.
This is also within the blockchain technology, so the technology that they're investing in. So although they are dealing from our side of view in terms of that aspect, they're also investing in the technology they use in other areas.
In terms of blockchain technology and banks, all 5 major US banks have already created their own private blockchains. And they did that mostly as a test group to determine the viability of the technology versus what they have in their existing infrastructure. And they've had very good results with these projects. Furthermore, Fannie Mae is making their own blockchain technology. It's not a cryptocurrency. Rather, they're using the underlying ledger technology to facilitate movement of information. So another thing that we should take into consideration is the SHA-256 algorithm. So prior to being incorporated into finance, SHA-256 was used for our messengers, our SMS and whatnot. Communications between satellites and Earth has also used the same encryption. NSA and other intelligence agencies have also used these encryption codes in their in their communications. However, however, I'm guessing when this technology was realized that you could send money over essentially SMS, that's the way it was going with Zimbabwe, even before cryptocurrency, those were digital assets. That's kind of what paved the way to the idea of the creation of bitcoins. This goes back to a 1997 report by the US NSA that had mentioned these digital assets being something that can be implemented into the future. So the way that the banking system works these days, you have money that is being transferred between intermediaries on SWIFT or other exchanges or other sorts of intermediaries, mostly bespoke private people who settle currencies. What they essentially do is they take money and then they forward it, in a sense, as a form of debt. Instead of forwarding in the form of debt to the other party instantly, like SWIFT does, what blockchain technology is allows you to send that money directly from one person to the next, or one entity to the next, without having to even deal with the idea of debt. And therefore, it has a tremendous cost savings in regard to that technology. And that's why banks are so interested in it. Not for the coin component or the token component, but simply because of the fact that they are able to reduce their costs and overhead. So what's become a decentralized sort of revolution by some has actually paved the way for new technology to be used in existing infrastructure. Now, whether or not people like that, whether or not people are going to agree or disagree with me, I see that there is a benefit for both systems to be in place. And furthermore, beyond blockchain technology, you also have what's called directed acyclic graphs. A directed acyclic graph is like blockchain, however, it does not use a proof of work component to validate your transactions. What proof of work means is that you have a bunch of servers that are working overtime to validate and secure your transaction using the SHA-256 algorithm. What happens with the directed acyclic graph is you have essentially AI, machine learning technology, doing those validations without using energy. So it's a more green solution. And if you look at IOTA's Tangle network, they're actually able to process more transactions. If you're looking at Hashgraph network, they're able to also process more transactions per second than normal, than traditional measures and from in comparison with blockchain measures presently. However, when the Ethereum network is going to get their Casper program out and done, that might show a change because they're using some technology with directed acyclic graphs combined with the mining, which would actually, they're going to essentially get away from mining and they're going to approach it from a different angle. So it might even be faster than what's going right now, which again is something of interest, but I'm not the subject expert matter about that. You'd have to ask my lawyer.
What was that alternative technology? What was that?
Directed acyclic graph. Short way of saying it is data. So
Short wavelengths?
it's the short way to say it is.
Oh, okay.
Yeah, it's directed acyclic graph is kind of a tongue twister.
Yeah.
Say it 10 times. But that's something that a lot of people aren't really looking at so much. They're still looking more at the blockchain because of the incentives of mining. People like to buy their mining rigs and they like the idea of getting coins from that. So, you know, it works for them. I'm not particularly on that boat. But I still think it's their choice. Good work.
I'm sure we can agree that, with this